Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, let's take a look again at the financial markets and start from the euro currency. When on euro currency we do not have a lot of changes compared to the gold market. Market is still calling in the tight range between the pivot points. So as we said previously, market really is bordered by pivot point support and resistance, and the weekly pivot point on the current week stands precisely in the middle of this range. So now market stands in the contraction phase. Since it's just a building and energy stands in a tight range, and usually the exit from this range could be significant. Well, previously within the previous couple sessions we do not have any patterns, and in fact was no possibility for trading, except maybe yesterday market has formed the Russian rings. So that was an opportunity for the short scalp trade, but nothing more, nothing serious, nothing great context here. And now market stands at this important and interesting moment. So you can see price has crossed with the MACD predictor line, and that is the time when the stop grabbers could appear. And one opportunity for euro currency is showing us the bullish stop grabber. If this will happen, market probably should take it out of these highs, but that probably will mean that market will break this range to the upside. If this will happen, as we said yesterday, then market probably will pass at minimum the height of this range to the upside. That will be about 100 pips. So not very tremendous move, but also not, it's a small move. So probably I thought that since we currently have a lack of other setups on the euro currency, that setup is worth our attention because it's rather simple. Well, let's see what will happen. Also, guys, here we discussed the possibility of the pairing. Just a minute. The pairing of the double repo sell pattern previously. Okay. So we have 1, 2, 3, 4, 5, 6, 7 bars to the upside, close below the 3x3, close above, and creating the new highs. The way that I like to see with the double repo, I have explained this million of times already, why I prefer to see the second top is greater than the first top of during the double repo pattern. Now we need to wait for the theoretical confirmation, of course, the closing below the 3x3 moving average. So here you can see the contradiction between the patterns, because if market will give us the stop grabber, then it will not close below the 3x3, while if it will close below the 3x3, below this green line, there will be no the stop grabber, the trend will shift to the bearish. That's why this current session is significant in the short-term perspective. On the lower time frame charts, on the 4-hour time frame, in fact I did not see anything interesting, so you can see that's Russian rings returning right back to the middle of the range. That is absolutely typical even from the classical point of view. So if market shows, according to the Jack Schwager book, if market shows the bullish trap, and that is the bullish trap that we call as the Russian rings, mostly by the Judd Napoli term, and that Jack Schwager calls this as the bullish trap, the failure breakout. Market should return right back at minimum to the middle of the range or even to the lower border. So depending on what market will show us today, we could say either we should be ready for upward breakout, or market will continue move lower, maybe even start the move with the double repo sell. Maybe this also could happen. That's why this situation now is significant. On the lower time frame, on the hourly chart, the situation is rather choppy. It's very difficult to find something reasonable here, but just if we will separate this action in some pots, smaller pots, we will see that in fact we have the combination of the two small butterflies. First butterfly, okay, 127, retracement. Second butterfly, left wing, okay, right wing, 127 also, retracement. That is also the combination of the 1618 from the first butterfly and 127 from the second. If you will take a look at the larger butterfly, here, that butterfly, the market hasn't hit the 127 target of it. Now, the swings inside of these butterflies is more or less harmonic. So the blue line is the cloned line of this initial swing that I cloned and dragged to these upward directions. You can see that every time market shows the similar swing except this one, just slightly lower swing. That was the wash and rinse, by the way. Downward swings also is very close. That's a bit greater. That is almost the same. Okay, I do not know whether we could we treat it as the three drive sell pattern or not, but theoretically the swings are stands at the ratios that usually three drive pattern shows. If this will be the three drive, market should take it out of these lows between the first drive and the second. Sorry, that lows between the second and the third. So that's around 134.74 area. It's right here, downward action. But this will mean for us that we will not get the stop grabber. We probably will shift to the double repo pattern. So let's see. In fact, I think that since we do not have the clear setup yet on the daily time frame, it's better to wait another day when we get the final confirmations, final clarity from the daily chart. Despite how attractive maybe these swings and maybe this is free drive or so on, this is a bit risky to trade it because you can see the price action is really choppy. That is just my, if you could see the compounding of this action, it doesn't carry a lot of possibilities for trading. It's just I just make the attempt to understand what is going on here on the hourly chart. And now, guys, the final statement that I would like to say today is it's a bit from the fundamental nature. I just today in the morning I just thought that probably we will not get the statistics on the current week. We will not get the non-farm payrolls release because Department of Labor doesn't function currently. They do not have enough employees to calculate the data and to calculate the statistics, and they do not have the employees to announce the non-farm payrolls release. So we do not have this important date on the current week, if of course government will not come to the agreement and will not start functioning again. That's the first moment. And after that, the next thought that I has come in my mind is what will happen and if the government shutdown will last till the 17th of the October, when the debt sale will come in the United States. That's the moment that really significant. Statistics is also significant, but the debt sale, that nobody will be around to rise the debt sale if government will be shut down. Well, that's the thing that we should care about, and that really could lead to doom and gloom if this will not be resolved. The longest shutdown period was during the Bill Clinton president term, and it lasted for the 3 weeks, 21 days. So it's really a bit worrying sign, and what will really happen, nobody knows, and that is a moment that we should think about and keep in mind, because as we will become closer to the debt sale, the nervousness on the market will rise, volatility will rise, and this really could lead to the significant changes in the financial world if that will really happen. So try to think it, and if you have some thoughts about it, let's discuss it on the forum.